And listen, everyone, thanks for coming in and giving me your time today. Okay, so just a little bit about myself. I'm a graduate of the University of Pennsylvania, former professor at Jefferson University in Philadelphia. I've been involved in the financial markets for over 20 years and began trading the futures and Forex market actually in 2004, which is more than 10 years ago. And I'm sorry if you hear all that beeping, but I have the live platform open behind us, and those are alerts. And I really want to spend some time on that live platform to show you the amazing signals. This morning we took 4 trades and we made $1,100. I'm going to show you that on Chart Trader and on our NinjaTrader Dome. And what we do at Rightline is we look at the movement of price on we look at the movement of price on any financial instrument as a closed system, and how a closed system behaves can be determined by determining a series of independent variables. And when you place those independent variables into a multivariable equation and then optimize it, you're able to determine the future direction of price with a tremendous degree of precision, which is really what we do here at Rightline Trading. Everything is optimized mathematically. We know the sensitivity, specificity, and predictive value of every trading entry. Now, it just so happens right behind me, the market's going crazy, which is why normally we don't get all these audible alerts. Now, what I wanted to show you was our 3-line indicator. That's the first part of our system. Now we've done quite a few system upgrades, but I'm going to show you the entire system. Now, this is really a key indicator in taking a trade. The first line looks at momentum. The second line looks at stochastic. And I'm sorry about all that noise. The third line looks at order flow. And I might just close the platform down and then reopen it later, because it's probably causing a real big ruckus. Hold on, I'm going to shut it down. And then right before I'm done, I will reopen, because it's just so noisy. Just hang on one sec. Well, it's closing down anyway. I just heard that it can't be heard. But I'm going to shut it down. And then it'll only take me a minute or two to bring it back up. Here we go. It's actually making so much noise, it's hard for me to think. Okay, so the first line is doing a multi-time frame assessment of momentum. The second is stochastic, and the third of order flow. Now, what makes this line so powerful is it doesn't look at momentum on your trading chart. It looks at your 2 higher time frames. This looks at stochastic on your 2 higher time frames. And this looks at order flow on the 2 higher time frames. Then when these align, price is going to move in the direction of these 3 lines, whether they're 3 greens and 3 reds. And we're going to look at each individual line and how momentum, stochastic, and order flow are assessed. Now, first, let's take a look at order flow. Now, you know that there's a delta associated with every candle. And that delta tells you whether there's an overabundance of aggressive buyers or an overabundance of aggressive sellers on the trade or in the candle. Now, the delta is a really important number, but you can see that sometimes you're going to get a positive delta on a down candle. And that's because there are a lot of sellers here. They absorb, or a lot of buyers who absorb all these sellers. The candle still closes to the downside. Delta is positive. In general, though, when the delta is positive, the candles move to the upside. When there's an overabundance of aggressive buyers, up you go. Now, the problem with using a chart like this, which just gives you the absolute value of the delta, is that it doesn't predict the direction of any individual candle. So what we do is we don't look at the delta value of the candles on your trading chart. We look at the value of the delta on your 2 higher time frames. Now, if you're trading a 3-minute, we look at your 9-minute and your 27-minute. If you're trading a 5 range, we look at the 2 higher fib numbers. We look at your 8 range and your 13 range. If you're trading a 377 tick, we look at your 610 tick and then your 9-something tick, the 2 higher time frames. If you're trading a Renko, we have to go in and figure out what those 2 higher time frames are, because the higher fibs pretty much approximate it based on the size of the candle body. So, and what we do is we take this delta of the 2 higher time frames and we put it in a 15-period simple movement, SMA, moving average. So when you get this occasional negative delta on an up close, it doesn't markedly skew the data because it's smoothed in a 15-period moving average. So when both of those higher time frame moving averages are sloping up, you know that buyers are firmly in control. When both of those delta moving averages are moving to the downside, sellers are firmly in control. And you cannot trade in the opposite direction of what the 2 delta moving averages, when they're moving together in the same direction. You can't trade against that direction. If you do, you're going to get stopped out. Now, here's an example. This is the E-mini. Now, the same thing, I want to make it clear. The same thing is operational on any instrument and on any time frame. This is the E-mini, but it could be a stock. It could be Forex. They're trading off the dome. You do get a delta on a Forex candle, and you do get the delta moving averages. Now, when the delta here, the delta moving averages are both to the upside, price is going to rise. And remember, this is not looking at price on your trading chart. That's why this variable is independent. It doesn't turn green because price is rising. The fact that it is green is what causes price to rise. When it's red or orange, we remove the orange color. Now it's either red or it's green or it's yellow. When price is red, it now moves to the downside. Now, everyone trading in the counter trend direction are very likely to get run over. Here, when the delta moving averages are to the upside, you've got to go to the long, you've got to trade long. I just have a few more examples. Here's the delta moving averages of the 2 higher time frames. We call it order flow because essentially that's what it is. And when you break resistance to the upside, get a great long trade. Here is a trade I took in the live trading room in the direction of the order flow to the downside for 18 ticks. Now here's a little bit more sophisticated. Here's market profile. And you can see when you break support here, you go short to support because order flow is telling you that sellers are firmly in control. Then you just don't have any trades here until price comes up to resistance. And then you take a short off resistance to support in the direction of order flow. And throughout all these moves, you see all these traders and these counter trend candles stopped out, stopped out, stopped out, all getting stopped out as price moves to the downside. Same thing again. Price breaks resistance, it becomes support, up you go. Back to support, long. Back to support, long. back to support, long, always in the direction of the delta moving averages of the two higher time frames. We took counter trend, we do take counter trend trades, but order flow has got to change direction. You cannot counter trend trade against the direction of order flow. Right here is where you have to wait for the trade. You take it here, where order flow is still long, it's going to come right back. Now, it doesn't quite make it. You're not going to get stopped out. You lucked out here, but this is way too risky a short. Now, I want to talk a little bit about, there's one thing I wanted to point out here that I think I missed. No, well, I think it'll be later on. Is MACD. Now, we use the MACD to assess momentum. And there are lots of different ways that you can assess momentum. An oscillator will assess momentum. We used to assess momentum using Heikin-Ashi. But what we found is the best way to assess momentum is the MACD. And here's why. There are two ways that you can assess. First of all, let's talk about MACD divergence. Now, MACD divergence is exceedingly unreliable. And if you try to trade it, I can promise you, it's going to really give you a problem. And you're going to take, it's going to work sometimes and not work others. And when an indicator functions like that, it's not usable. It's got to be reliable, essentially between 80 and 100% of the time, or it's not valuable. And you can see here, you make a higher high on this pivot, but the MACD makes a lower high, so you have divergence. But if you try to short it, it goes right back up. Here, MACD makes a huge lower high. Not only does it make a lower high, you get a MACD crossover, which I'm going to talk to you about in a second. But price comes down a little and then just runs you over. So you can see that MACD divergence is a very, very bad signal to take. Traders have been taking it for 20 years and losing money on it. And I don't know why anybody still even looks at it. Now, here's the MACD crossover. And you can see that if you shorted the MACD crossover here, you also went nowhere. Price just went right back to the upside. So trading the MACD off your trading chart is going to be absolutely useless. It's telling you where price has been, and it has almost no value in telling you where price is going, especially on a divergence signal. So what we do is we look at two different parameters on the MACD, which is reflected in the 3 line, and I'm going to show you how it's reflected. The first is we look at the two higher time frames again. We do not look at the MACD on your trading chart, which will only confound the assessment, make it less reliable. We don't care what price is doing on your trading chart, only the two higher time frames. Now, the first assessment of momentum is the slope of the MACD line. Now, when the slope of the two higher time frame MACDs is sloping to the upside, you're going to get one long signal on the 3 line. When you get the crossover, you're going to get a second. So I'm going to show you how those both play out. But in either case, what we do is we don't trade the crossover. We trade the slope of the two higher time frame MACD lines. But we signal on the 3 line when you get the actual crossover. And you'll see how reliable it is when you're looking at the two higher time frames and you're looking at the slope of this MACD line as an assessment of momentum. Because as it's sloping up, you know that it's accelerating away from the signal line. This histogram is rising. And that's what you want that histogram to do. Now, here we have two independent variables or two independent forces which must align to take a trade. And it's the same thing right here. Price is doing nothing, but once it breaks resistance, you've got a long trade. You can only trade in the direction of the multi-time frame assessment of momentum and order flow. Again, the time frame and instrument here are irrelevant. You've got them both aligned. You want to take a long trade only, and you're going to see, I'm not talking about the entry now, I'm just talking about the directional bias. You'd be surprised how many traders don't get a feel for a good direction to trade. We're looking for tops and bottoms before they occur. And let me tell you, you're not going to get a market turn until institutional traders decide it's going to turn. And this is an indirect assessment of institutional money, because when there's an overabundance of sellers on both higher time frames, it's usually because institutional money is at play. And when order flow and momentum align, it's also, again, because institutional money is working onto the short side. Then you can take this potential trade short. Still a little riskier, but you got to trade in this direction. Now, what happens when these two don't align? And when these don't align, and it happens actually a significant period of time. When they don't align, you can't trade because price is going to chop. If you ever asked yourself, why does the market chop for such a significant period of time? It's simply because the independent variables or forces that are operational on price when they don't align send price simply into chop. You get no direction whatsoever. When they align, then price is going to move in their direction almost always, because it's based on the assessment of your two higher time frames. Now, you don't need the indicator if you can do this assessment on your own, but it is not easy to do. And if you want to trade multiple instruments, you can't do it. No alignment here, price chops. Get the alignment, price breaks, and you get the long trade. Now here's stochastic. Now stochastic, we've kind of modified our assessment of stochastic to make it a lot more tradable and I think more reasonable and rational. Again, if you want to trade stochastic divergence, you're going to have a huge problem. Although the indicator is going to mark out stochastic divergence for you, because our divergence is going to come off of a higher time frame divergence. And every now and then that has some validity. So although I almost always ignore it, you're going to see when stochastic divergence on the higher time frames occurs. But stochastic divergence on your trading chart is just not going to be helpful. And this is the same chart we saw for MACD, and you see the much lower stochastic. It's making a much lower high. Price is making an equal high. If you faded it, you went nowhere. The price just goes straight up. But stochastic divergence, for some reason, based off of the higher time frame, does have a little more validity. So we project it, but I almost always ignore it. Now, the way that we've configured stochastic is this way. All the traders who trade it and lose money look to fade the market when the market's overbought. Our supposition, and this is the way a lot of traders feel, is that when the market's overbought, the bulls are in control. So when the market's above the 80 line, it doesn't make any difference whether the stochastic line is above or below the signal line. It's always going to give you a green line. The bulls are in control. When it's below the 20 line, the stochastic line is going to say that bears are always in control, and this is on both higher time frames. And so it's always going to give you a red line. In between the 20 and the 80 line, the color it's going to project depends upon whether or not the stochastic line is above or below the signal line. When it's below, it's red. When it crosses above, it's green. Above, always green. Below, always red. And you are going to see stochastic divergence. Well, like I say, we have it programmed in, but I pretty much ignore it. And we're going to show it to you. So when it's overbought, oscillator line stays green. Oversold, oscillator line stays red. Now, when you see a strong uptrend or strong downtrend, potential divergence is going to trigger a color change. And here's an example. Right here, there's the stochastic line. All of a sudden, you get one blip of red bracketed by two greens. And that's higher time frame stochastic divergence. I couldn't really show it because if I showed you the higher time frame, you wouldn't be able to see the three line. But it's there, it doesn't work, and price continues to move up. But we do want to display it in case you're not in a trade. Maybe you'd want to stand aside. So this is a very easy way to make the assessment. And this is actually a more sophisticated assessment than the three line itself. And I'm going to show you how. You see these candles, they're outlined in light blue. Now, when the three line is aligned to the upside, and you can only take a long trade, the candle outline goes blue. Now, this is not a default setting. You can change this outline, and you can make it thicker or thinner. I mean, it would have been a lot nicer here if I made it green. You would see it better. But you see that you get the yellow line here still giving you the candle outline. That's because here the MACD line on the two higher time frames are heading up, but they haven't crossed the signal line yet. But the analysis of the candle outline is analyzing the MACD direction, not the crossover. But we make the line go green when the MACD crosses the signal line. And I guess some may think that's a firmer signal, but I don't believe so. As long as the MACD lines are heading up, you can see them, you can see that analysis right off the candle bodies. So what makes the indicator so easy to use is you don't have to look at the three line. All you have to do is look at the outline of the candles. Price breaks, comes back to support and up. Retraces to support and up. You see the candle outline is always light blue. Comes back to support and up. Into consolidation, into support and up. And these two down candles, the three line is still pointing up. You just can't take a short here. Now here you're trading into support, so you can't trade short either. Then here, up you go. So it's really an excellent way of assessing a trade. Backing up, backing up. I made it thicker, it's the same chart. And here I changed the color to make it even easier to see. Back and up, back and up, back and up. Now, here's our chart. Now, this is still our first version, and we're working on our second version. This is our Uni-Renko chart. And you'll notice that we take an oscillator signal in the direction of the three line always. Oscillator signal in the direction of the three line always. And we take a short when the 50 is sloping to the downside. It's super easy to read these signals. Now I want to show you something that's really, I hate to say the word cool, but it really is cool. It shows you how the three line indicator leads price. You see this up candle? This up candle has the three line has already turned on it. So it's forming to the upside, but the three line is now aligned to the downside. So when you get the oscillator signal here, you already have the three line turned. It turns before price turns because it's turning off the higher time frame. And it's handing you this entry. The same thing here. It's turning, the three line turns first, then on an up close, then the oscillator closes to the downside, or the price closes on the short Renko, as long as at least the wick breaches the 50, you've got a short trade on a falling 50. And these are both full winners, the way we make the assessment. Now, I didn't put it in here, but look at this reversal. This reversal, this up close. No, I'm sorry, this is wrong. I don't want to confuse you. So these are two absolutely perfect trades. Now, this is a separate oscillator that we made, and this is an exponential oscillator. It's a really complex oscillator. Now, we take this off of our trading chart, and this is the only assessment we ever use off our trading chart, but it has to be taken with all these multi-time frame assessment indicators. And you're going to see that we have others on the final platform. And you'll see today how we blew out $1,100 really easy. Here's another trade, short side and down in the direction of the 3 line. 2/3 of the candle close has to be below. Now, you see how this short trade here was censored because the 3 line was angled to the upside? You can't take a short trade when the 3 line is blue. Otherwise, you would have had a losing short trade here. But the 3 line knocked it out, and you don't take that loser. Here are 2 more trades. Perfect shorts. This one is telegraphed. This one is not. Here's a long trade. And you're going to see today, we get these. We had so many of these today. I stopped at 1,100. We could have made 1,800 or 1,900 easy. Oscillator off a rising 50, long. There's your short. Oscillator, falling 50, or yellow 50s also works. And short. Long, boom, long, boom. Can't take that long. It's too far off the 50. Don't have the 3 line. Now, the dots that we've added are showing you the multi-time frame assessment of the Russell and the NASDAQ. So when you take an E-mini trade, it's great to take it when the NASDAQ and the Russell are moving in the same direction. It's not mandatory because sometimes the NASDAQ moves in one direction and the Russell moves in another, and the E-mini moves in a separate direction. And that was operational this morning when I think one of those markets was not moving quite in tandem with the other. But I just wanted to show you the 3 different colors you get. So this is assessing not the E-mini, but the NASDAQ and the Russell and the strength of the downtrend. We'll look at the multi-time frame assessment. When it's the darkest color, it's the most powerful. A little lighter, less powerful, very light, least powerful. Here, least powerful, intermediate, strongest. So when you have a dot like this on a long trade, you're trading in a strong multi-time frame alignment of not only your chart, but also of the Russell and the NASDAQ. It just gives you an added advantage on taking a trade. And you're going to see on a live chart how well that plays out. See, now, I didn't put these in. This is just right off of a chart. I just spread it out. Here, you've got the down oscillator signal. You also have a red dot. It's not the darkest dot, but it's a good dot. And so this almost assures you of a winner because you're trading in the direction. And you not only get a telegraph signal, you also get a short trade in the direction of the Russell and the NASDAQ on a multi-time frame basis. And that is one heck of a great signal. That's the best signal you get. When we get those, that's where you can actually add contracts. You're trading 2, you can trade 4. If you're trading 4, you can trade 6. These almost never fail. It's the most reliable signal I have ever seen. Now here's the long trade right here. Oscillator signal. No 3 line here. No stochastic here. Here's you get the alignment. The 50, the 3 line, and the dot, and up you go. And I'll show you, this is a continuation trade. You can continue to take this trade. After this candle pulls back and stops you out, you go right back in and continue the trade all the way to the upside. This is a 6.5 point trade. Perfect trade. 9 3/4. These are live charts. These up are telling you the market's oversold off the oscillator. It's below the 20 line. That's all. And you see how this was telegraphed? The 3 line went green right here, went blue on a down close. And if you wanted to take this reversal, you could. And this is going to get you to your first target, which is 1 point. But we have 3 contracts off at 1 point. That's a $150 trade right there. And you're in and you got the trade. This wick is going to take you to 5 or 6 ticks. That's the oscillator. I just wanted to show you a big example of it. Now, let me open up the platform really quick. Just going to put this over here. And then we'll go through it a little bit. I think you're going to be very, very surprised. But it should only take a minute or two to load. Now we've added an additional indicator that I wasn't able to project because it's brand new, and it doesn't complicate things. It makes trading even easier and better. And we have a lot of multi-time frame assessments so that you're not going to get chopped out of a trade. About 8.5 to 9 signals that we get out of 10 will work. As long as you obey the rules, which is true in everything, I think. All right, the control panel is up. But anybody can show you anything on a chart or on a JPEG. What you want to see is you want to see a live chart, and you want to see the trades. And that's the important thing. So that's why I want to spend a lot of time. And then I'll show you our offer, our webinar special offer. And it really is a special offer. They're booting. I just couldn't listen to all those beeps. The market was moving at 1,000 miles an hour. Let me just quickly see here where the market is while it's opening. I can have it on my phone app. The market is crashing. It crashed yesterday. It's not so crashing here. Got some up. Okay, it's not too bad. The Dow's up 21, the S&P is about 3, and the Nasdaq's 50. It was worse before. Because I have an options portfolio, and we're getting a little bit clobbered because of this volatility. I'm not taking anything off. I think I'm trying to wade through this volatility and let all the spreads I have, even though they're debit spreads, they still work. Time works in your favor. All right, the platform's almost up. It's loading. And I'm starting to get the alerts. So it's just about there. And believe me, I'm sorry about the time lag, but it was worth it for me because I just didn't want to have to listen to those beeps. It's okay when I'm trading; it keeps me awake. But when I'm giving this webinar, Now for forever, okay, the platform is up, the control panel's up, and everything is loading. For a long time, I was really a diehard range fan, but I've really become a Uni-Renko convert, a hardcore Uni-Renko convert, actually. Now, I know I have only 9 minutes, so I want to go through this chart really fast, but I'm going to show you a ton of entries. I'm going to show you today's trading. Just about there. I mean, there's so many multi-time frame assessments. It may be a little bit confusing at first glance, but with just, actually just a couple of days of screen time, and we do intermittent webinars, like we're having a webinar tomorrow for all the software owners, so I can go over all the entries and the value of all the indicator signals. So let's, I mean, we're real close. The Ninja's loading all of the indicators, and I have until the quarter after. And I also want to be able to answer any questions, so I'm going to spend about 5 minutes here. All right. I mean, it should be up in a second. So I didn't anticipate it. I could have been. So now I also have a range chart still up because I've kind of like addicted to it, but I didn't trade off of it today, and I don't spend much time looking at it. I really focus my attention on the Uni-Renko. Now, right now we trade the Uni-Renko E-mini and crude. Eventually we're going to add gold, and eventually we're going to add an auto trader to the Uni-Renko system. The signals are fabulous. So it's still loading. I'm watching the wasted 3 minutes here. It must be slow because maybe because the market's really moving hard and a lot of volume is crossing. If I would have known it was going to be this much time, I would have left it open, but that beeping was driving me crazy. So should be any second. Now, when you get the platform, I want you to know that Sergio will configure the whole thing for you. You don't have to worry about the technical aspects. You always get free upgrades and add-ons for life. There's the platform, finally. Amen. Okay. Now, let me move the slides over, and let me show you the E-mini today. Now, I'm going to go back to the morning and show you our trades. And I did a lot of work for the traders in the room because I wanted them to see the trades. And we'll just take today. Now, here's the first trade, right here. Now, it's a counter trend trade, but if you'll notice, it's a telegraph trade right here. And here was the trade too. I took it, this is a pure counter trend. That background color means the multi-time frame assessment of the E-mini is long. So I'm trading against the direction of the NASDAQ and the Russell. You see the dots, but I got telegraphed by the 3 line, which turned first, and then I took this trade down for 2 3/4 points. Then we got a pullback, another oscillator signal, again telegraphed it down, the 3 line turned first, and this one went forever. Now I'm going to show you something. Here's Chart Trader. Let me open it for you. That's what we made today. I'm not kidding you. We made $1,100. Now I took this oscillator signal long right here, and I made 10 ticks. And here's the 3 line. You see the outline of the candles, and these are quant lines. These are an assessment of money flow. And I didn't have time to go over them in this webinar, but money flow is moving the price up, and it's another counter trend trade. Then we had this trade short, which I didn't take. Was too worried about it, even though it was a telegraphed short. Then here's the continuation long in the direction of background bias. It's really a very easy program to understand, with the dots telling you you're trading in the same direction as the NASDAQ and the Russell. You can see that the 3 line has already turned. As soon as that candle turned, up we went. That was a gigantic trade. No wicks on the Renko. No way to get stopped out. It went 6 points, 6 3/4 points. Then I took this long trade right here. Telegraphed, up, bam, we were done. Now we continue to get great signal. Look at that signal. That's a drive it up to the bank signal. There's the telegraph. There's the entry. There's the oscillator signal. You see you have the 3 line, and when you look down here, you have money flow strongly up, and with all of this blue background bias, even though this is a small period here where you don't have it, your direction is long. And up you go. That was 5.5 points. Now, we stopped. There's no entry here. This is just a counter trend. It's a telegraphed signal here, but there's no oscillator on the entry. There's no trade here. There's another trade you could have taken. Telegraphed short right here in the direction of the NASDAQ and the Russell. I didn't take it because we were done. Once we get $1,100 on 4 trades, we're finished. And there was the entry. And we went 6 3/4 points. That's a potential continuation. I wanted to see the dot, though.
You got 2 minutes, Mark.
On the entry. Okay. I only got 2 minutes, so I'm sorry I wasted time, but I'm telling you, these signals just don't stop. There's another short right here. Let me just go up. There's another long right here in the direction of the NASDAQ and the Russell. Background bias is blue, dots blue, 3 lines blue, telegraph, the 3 lines already turned to the upside, oscillator signal. It's a continuation long. I don't even know how long it is. It's probably 6 or 7 points. So you're going to get these signals over and over and over. Now let me just show you our offer. Same thing with crude. I didn't trade crude today because we were done before we got a good entry. So I don't know what really happened. We were done at 10 o'clock this morning. Here was a short trade on crude. Telegraph crude continuation short in the direction of the trend. Let me put the slides back up. I hope I can get to 1 or 2 questions. Let me see what it is. All right, I'm right there. Let me show you the offer. And I'll just take 60 seconds to answer as many questions as I can, because I don't want to overstay. So it's normally $19.99. It's $1,100 for the webinar. If you trade it today, you paid for it today. We made $1,100 today. If you're one of the first 10, you get a month in the trading room with me, and you get a 10-module educational series. The offer expires on Friday at midnight, and I'm telling you, we kill it on these entries. They are terrific entries. Now let me go and quickly look and see if I can answer a few questions. And I'm only going to take 60 seconds to do it. Okay, I'm using Ninja. It works for Forex. Great, Phil. You get great entries. You have a different setting on the Forex, a different Forex Uni-Renko setting, but we'll give you that information. You don't have to worry about that. We install them for you, George. We'll take care of all the installation. You don't have to worry about that. I didn't know you guys couldn't hear the noise. I'm sorry. Only with the 3-line, Joe. You got to have that candle outlined or you have no trade. You're going to install the indicators like I said, George. It works for Forex. It's on NT7 now. It will very shortly be on NT8, George. All right, listen, everyone. Thank you so much for your time. I don't want to overstay. I really appreciate your attention and your afternoon. I hope you'll come aboard. We do make great money and we get great signals as long as you follow the rules really, really dogmatically. And they keep coming and coming. So have a great afternoon. I'm going to sign off and thank you for having me and letting me a participant. So have a great afternoon, everybody. Bye-bye.